So last year in delivering alpha, we picked First Data, up 24% year over year.
Yeah.
It's interesting, of the five picks, the worst pick was the only one that was taken over. Generally speaking, when you have a takeover, you generally make a decent amount of money because of the takeover premium. But my worst pick was up 5%. That was Shire. United Airlines, which I would pick again today, is up 32%. And what drove me to United Airlines? The market 17 times earnings. When we recommended, it was about 6 or 7 times earnings, including the just reported quarter. The company has bought back roughly 45% of its equity capital in the last 4 years. They're out with guidance, if you allow me to use round numbers, of 8, 10, and 12. I think those are low because they are assuming very modest repurchase. But whenever the stock goes down, they're a significant buyer of their own stock. And if you have good sponsorship, Warren Buffett owns about 10% of the company. I don't expect him to buy United Airlines, though he did say on one of your programs that he would not rule out buying an airline. You know, maybe I'll get lucky there. So, you know, last year was First Data, Shire, United Airlines, Hess, WPX Energy. Hess was up 55%, WPX was up 88%. And I look at my picks. If you ask me my picks this time around, I'm just looking at a sheet of paper here. AMC Networks, which we like a lot, that's trading at 7 times this year's earnings, a little over 6 times next year's earnings, growing 10% a year. But what's the interesting element about it? 17% of the economic interest of the company is owned by the Dolan family. They, because it's Class A and Class B stock, own 60% of the vote. So anything they do in the area of capital management is not motivated by the desire to entrench themselves. They're already entrenched by an A and B stock. And I believe you got to pay attention when a 17% owner is aggressively buying back stock every quarter, $50 to $100 million. They're telling you they think their stock is significantly undervalued. The industry is consolidating, and I wouldn't be surprised if somebody took them out. And I think the takeout value is closer to 80. And the stock, we got involved at 50. Another one buying back a lot of stock. It's a mature big company, selling at half of the market multiple, a little bit more than half the market multiple. Citibank. CVS Health merging with Aetna, 8.5 times earnings, growing more than the market. 2 new energy names. We still own Hess and WPX, but I wouldn't highlight them here. But I would highlight Keene Group in the fracking business and Nabors onshore drilling activity. These stocks are selling at 2, 3, 4 times cash flow, and I think that the price of oil is going to be rising, not declining, which will be good for their business. So, you know, those are examples of names that I would use presently. But we're finding a lot of things to do. But, you know, I would say the market is adequately valued. I think the European market is more interesting, and Japan is even more interesting. If you look at Japanese price-earnings ratios of their companies versus their interest rates, there would be extraordinary value added. Now, I happen to be very much of a bottom-up guy, and I don't have the competency on individual stocks, but I would say on a macro basis, Japan would look very interesting.
Let me ask you this, Lee, to impart some more knowledge on our viewers. You mentioned the tremendous gains that United Airlines has had, and that you would buy it again today. How do you know when it's okay to buy a stock that's up 30-some-odd%? You can pick any other name that's up a lot when you say I'd buy it again today. How do you know?
Well, you don't know anything for sure, but basically I look at, like I said, the price-earnings ratio. I look at the free cash flow. I look at the markets they operate in terms of is going to be demand for air traffic? Are we in an expansionary environment? Are we in a contractionary environment? You know, what's the free cash flow? What's the balance sheet look like? And you make a judgment. Like I said, I think that they could probably grow with the cap shrink about 10% a year, maybe more. Okay, because they're reducing their cap by 10% a year. So let's say they could even grow EPS 12, 15%, and it's trading at a third of the market multiple. And I like what they're doing with cash. I met with the new COO, and he told me when he joined the company, he didn't want any cash compensation. He wanted his entire package in options, which the board didn't want to do. So, you know, they're eating their own cooking. They believe in what they're doing. And so, you know, and I've been on a few flights. I just came back from Europe a week ago. I can't find a United flight with an empty seat. So that's pretty good stuff.
Yeah. I noticed you have PayPal as one of your holdings. I know you have a team that you know, also does a lot of this with you. Do you have thoughts on PayPal? I ask you, you know, simply because we got a letter yesterday from Dan Loeb to his investors who was awfully bullish on this stock. 125 bucks price target he thought of.
We're positive on it, but it's not one of our largest holdings. But Dan's a very smart guy, and I would listen to Dan. But we own it, but it's not a major holding. You know, our major holdings are the ones I've mentioned: United, Google, AMC Networks, First Data, Microsoft, Ashland Global. We like a lot. One that I didn't mention that's gotten hammered because of they're poorly handling the acquisition of Tribune. In my opinion, they poorly handled it. Is Sinclair Broadcasting. They're sitting with $1 billion of cash in the balance sheet. The entire market cap of the company is a couple of billion. And once this thing with Tribune is resolved one way or another, I expect them to intelligently use their cash. Dow, DuPont, you know, we're finding a bunch of things to do. But I would say that the market's in a zone of adequate valuation. I'm looking forward to my new life, to be honest with you. Right now, my challenge is to do well for my investors, and I got to return a lot of money at the end of the year. So I got to convert my stocks into cash, and that's a lot of my focus.
Yeah, I bet. Who do you think's going to $1 trillion in market cap first? Google, Amazon, or Microsoft? All three stocks you own, and all who are north and well thereof of $800 billion.
Well, Amazon's growing the most rapid of the three. It's a good question. I hope Google, because that's my biggest position.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.